Welcome to Trading Lounge and the gold report for the 2nd of July. We're also going to have a look at silver as well. Now, this particular count that we've got with gold here, I've got it as a bullish count from wave 3 here, and an A and a B and a C for wave 4 here, and then looking from wave 4, looking up for wave 5. Now, of course, we've got the Fed pumping money into the system, and therefore we'll see, we should see equities rise, which we are. They're buying up anything that they can get their hands on, basically. So we'll see all that sort of push up. So you think that gold would push down from that perspective, but there's that underlying dark cloud covering the world in terms of debt. So people are still, buying into gold as such. So I think there is a real possibility that this can play out. But today we'll also have a look at the other alternative count, our primary count for gold, which is pretty much pulling back from this particular top here. In fact, we can look at that now. So let me just take, this particular count here, this is the counts that we're looking at the moment. So just to go over that a second, we've got wave 3 up here with an A and a B, and then 1 and 2 and 3 and 4 and 5 down here. It fits okay, and I understand that these aren't the greatest wave 1s I've seen in the world, and in fact this wave 1 could even have wave 2 sitting over here for that, but proportions and ratios kind of I feel this okay with this, but adjustments will need to be made. But the reason for doing this bullish count here really was just to continue to track to the upside here, and that's what we're going to do. The variation on this, or the alternative count on this, looks like this here. So all of this down here for the A wave here, then an A and a B and a C here for the B wave, and then 1, 2, 3, 4, and looking up for 5 up into this space, and looking for the market to terminate close to the 1800 area here. So I'll just put that in there. That's a minor level and pretty important one at that. But besides that, it's coming into the old highs here for that. So that's the bearish count from this point, and we would see the market come down in 5 waves and then push up again from that. But coming back to our bullish count here for a moment with this one here, all we're going to do with this is keep continuing to follow it up and track it up until proven otherwise, until proven wrong. In fact, we're long in this here since we started covering the gold here. And as I mentioned, there is that dark cloud cover, throughout the world. And this particular little chart here, this is something that Ray Dalio did, and Lynn Alder updated this section over here. So we've pretty much got the the debt from World War II here, and the inflation bubble here, and coming back down. So as this pushes up, we would expect the inflation to push back up, and I think oil prices will be an indicator of that scenario. But this is a massive dark cloud cover, and you can see why people would want to hold gold. And this is also why we want to have a look at silver today as well, because the gold silver ratio is quite expanded at the moment. But even more than that, the Elliott wave count for silver is good. So just for a moment here, when you look at this move down through here, right? Well, silver's still down here for this, down in this level here. So it's lagging. So it should sort of catch up to some point. So if I bring a silver chart over, which is a monthly chart here, and we've got this silver chart here going back to, I think gold got released in 72, didn't it? So I can't get in the 80s it had the peak there. So this is all the same as gold, but it hasn't pushed up it's not trading up here at its old highs at this stage, and the gold silver ratio is really expanding. How many silver coins you can get for a gold coin, basically, or an ounce, But what interests me here in terms of a technical point of view is this capitulation here on this spike lower here. That's caught my interest, and I'm going to start looking at, I'm going to move into the daily chart and just pick this area up in here in terms of Elliott. So this sharp move down through here. The thing that I like about this is just a daily chart, and here we're looking at the medium level here at 1500, and then the major trading level at 2000, 1800 here, so 8's a profit-taking number. So 1800 is up where gold is at the moment. Well, it's in US dollars. So this is decimal pointed here. So, but what interests me here is I can see a very clear 5 waves to wave 1 and 2 here, and then wave 3 is perfect in terms of 1 and 2. Well, if I can just move that over here a little bit, that might need to be, doesn't matter. Nice 3rd wave, 4th wave and 5th wave here, and then an ABC for wave 4. Wave 4 may get a bit more complicated here. But my main point here and the takeaway here is that if this moves up here further, and it looks like it will, as soon as it makes a new high above wave 3 here, we can start to view this as wave 5 moving up here. Now, this is important because in Elliott terms, when you get an impulse wave, which is 5 waves in the opposite direction of the trend coming down here, then this 5 waves here will produce another 5 waves after a correction. So we can look at from the low here, if it pulls up roughly to the 2000 there, then it can pull back into the 50-60% retracement level here. It may not pull all that way back. It may just want to stay basically up near wave 4 here as an ABC pattern. But what it does do is it gives us an opportunity to buy silver in a sense. Now, of course, you have the US dollar. We've got the US dollar continuing to move higher. I know it's been sort of deleveraged and become weaker, but our Elliott wave count has it moving higher over a longer term. So that's a positive thing for this. And the thing here to do, I'm thinking is that at some point we're going to have a recession. At some point the money's going to run out, and once Trump's had his election and he's either in or he's out, whatever the case may be, well then more sensible policies will come into play, and unfortunately bring the market back into perspective. And this is where silver comes in. So what I was thinking is that, we don't particularly want to hold silver physically too much because it's cost money and so on and so on. But there are firms out there. I'm not very keen on ETFs as such, but because they're basically empty. If the company that was running the ETF crash for whatever reasons, well then probably everything would just disappear. I've been around the market since the early 80s. I've seen many companies that come and go, and if they don't have any real value asset behind their actual ETF, well then they're pretty useless to me. But there are companies out there, one in particular which I need to research a little bit further, and then I'll bring it online for you, but they have ETFs in silver, but they also have the silver to back that ETF up. So you're buying a certain amount of silver, based on, their own physical stockpiles. So I think that's pretty exciting, and that needs to be researched a little bit further, but I'll bring that on the table at some point. But I just wanted to introduce today this impulse wave to the upside here, because after we've had the pullback here, then it looks like we'll go into a 3rd wave to the upside here. And we need to do our research in this period through here and work out, if we want to be holding any of these ETFs with real silver, on those ETFs. So I just think this is an exciting opportunity that could present itself. It still needs to unfold in a certain way to get to this, point here. But it does give us quite a few years of silver catching up to gold in that ratio, because that gold's just been gold silver ratio has just been becoming further and further apart. At some point it will come back and adjust. So anyway, I just thought I would introduce that today. Coming back to this here and just drilling straight into, I think I'll just go straight to the 4-hour chart here for this. So we were looking, last time we spoke about gold, we're looking at this as 1 and 2. And don't forget that this particular count that I've got here as 1 and 2 may not be the case. But what we can pretty much rely on is the blue count here. So we know that this is an ABC pattern here. We know we've got 5 waves up here. We know we've got a corrective move here. And since we've been speaking through all of this, we've been counting these structures up here. And from this wave 2, we can put in this wave 3 here now for this sitting on top here. And we'll be looking at wave 4 here. So wave 4 will pull back 38.2%, which is pretty much where that current low is now on that situation here. So I'm thinking, this is a wave 4 here. So I think that we'll see something like this here, but just a little bit bigger here, because it's 1 degree higher in labeling, in structure terms. So we'll see that play around here. I have moved the stop to break even here. And we've mentioned before about, coming into group 2. So between these 100 points here, consider these minor levels. These ones in between here are sub-levels. So it's just the Fibonacci numbers of 1, 2, 3 here to make up group 1. And we know if we get support on group 1, then we'll move to 5. And the market moves quite quickly between 3 and 5 in both directions. And then we've got the midpoint here. So we've got 1, 2, 3, and the Fibonacci numbers go 1, 2, 3, 5, and 8. So this 8 here makes up group 2, which is 65, 72, and 80 here. So we can expect some profit taking going on wherever we see 8, and this is why we'll see profit taking going on at this larger minor level 8 here as well. So yeah, so I'll probably change these 1s and 2s here, but this is where we're going to be taking profit, and this will be either where we'll turn bearish or bullish from this point, but it will take a while to unfold from this point. I just want to go to the tick chart and just unravel this a little bit for us. So this is the wave 4 that we're just looking at the moment here. So I just want to go over it. It's always a good learning thing, so let's keep an eye on it. The current move down here, we can count 1, 2, 3, 4, and 5 here. Nice impulse wave. Then back for 2 here, then 1 and 2 here, and then 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave for the third, back for the fourth, and down for the fifth. So that will make up the A wave here. Now, from the A wave, we'd expect 3 waves up, and 3 waves up to the 50-60% retracement level for wave B here, and then we will move back down through here. It is possible that wave B is already sitting on here as an A and a B and a C, but I can count 1, 2, 3, 4, 5 to here, and then this, and another 5 up here. So it looks like it's 1 and 2 and 3 here, and 4 here, and 5 here to make up A here, and then down into the 50-60% retracement level for B, and then going up here in 5 waves. So don't get caught on this here, and then we'll look for wave C to come down here. So an A wave here, an A, B, and C here for the B wave here, and then down for the C wave here. Because this is 5 waves here, we're going to get another 5 waves over here. It may be just from here. This may be in here. We may just come down. If I just copy that there and put that there. So this could be, in that case, if I just copy that here, that could be wave 1 here, wave 2 here, wave 3, 4 and 5 coming into here for this, something like that anyway, you know. So that's all possible at that point. Look, but at the end of the day, it doesn't matter. We don't want to get stopped out by this. We want to use this here as a buying opportunity to build into, to move up, and we'll build our trade up, and we'll go up to the 1800, and then we'll exit from that point, and then we'll just wait and see for the next trade setup. That's all it is in that instance. So we'll just leave it at that, but I'll just go back to the 4-hour chart so you can kind of see that there now. So we're looking down here as 5 waves for this, down here for 5 waves, and then we're looking for some sort of B wave back lower than that here to the 61.8%. So we already got half of that in there already, and then down again from this point here. We'll keep the stop here at 1746. At this point here, 1746, below this one here. I don't want to put stops on, never put stops on whole numbers, because you'll only attract getting stopped out at that particular point. Yeah, so that's where we are today with that. So just wanted to update our little trade here. So in a nutshell, we want to take a percentage out in this group 2 level here, move the stop up, look at this count where we are here, reassess it, and our target is still up at the 1800, and we'll get out there and we'll just wait and do nothing for a while, and we'll just look at the reaction that we get from that particular point. And because I know that these will have to be adjusted at this point, because this third, if this is wave 2 here to wave 3 here, this is still just, this is too short here. So there's more work to be done on that, but yeah, look, I just wanted to update the trade, the Elliott wave count, and also bring in silver into the fold, which I think is pretty exciting as a longer term hedge if we go into a decade of redemption. Okay, deleveraging actually. Alrighty, thanks, cheers.